To hold the investment for 4 years and to still technically be in the negative, it's a bitter pill to swallow. 5 years of buying gold. Has it paid off? And was it worth it? Okay, so we've explained the title of the video, but how are we going to break this down? Well, I've put it into categories. We're going to be firstly talking about who I am, what I invest in, why I invest, and then the results of investing in gold for the last 5 years. Okay, so let's get straight into the video. Who am I? My name's Future Investments, and I'm a content creator here on YouTube. I am very, very passionate about investing, and my goal is to become a successful entrepreneur. Now, for the last 5 years, I have been thoroughly investing in commodities such as precious metals, which include gold and silver bullion. But what are my goals? Well, before we get onto the goals, the what, the why, and the results, we need to talk about what I've invested in. So starting off with what? Well, I've invested in gold, which is currently sitting at around 1900 British sterling pound per ounce right now, almost breaking that £2,000 per ounce mark, an incredible milestone. I also invest in precious metals such as silver. That's on a much lower scale, sitting at around £22 per ounce of silver bullion. You can see the vast discrepancy there between gold and silver, 1900 to £22, a big difference. I also invest in index funds, the S&P 500 and the FTSE 100 predominantly, for the reasons that I want to save money over a long-term plan on a fairly low-risk method, using compound interest to benefit the money that I add on a regular basis. The reason I have the S&P 500 is because the United States has the largest economy in the world, and it doesn't seem to be showing any signs of slowing down. And as a British citizen who lives in the United Kingdom, I have to invest in the country that I live in, so therefore the FTSE 100. I also believe in property, not only property that you live in, but specifically investment property. Property that's going to give you capital appreciation and generate you semi to passive income. Now moving on to the why. Why have I invested so heavily for the last 5 years? Well, my goal, like most of you watching this video, is to become financially free. I want to be able to enjoy life and the fruits of the labour from working hard. Now, what are the results? This is the big topic of the video, isn't it? What are the results from the last 5 years of me buying gold, specifically gold bullion, as a precious metal investment? Well, what I've done is I've gone through some of my figures, and you're going to be getting an exclusive look at to some of the prices I've actually paid for my gold bullion. And what we're going to be doing is we're going to be comparing the price I paid to the buyback price now from a specific bullion dealer. We're going to be looking at the difference in that value and the percentage, whether it's minus or plus. There's some interesting figures here, so definitely stick to the video because I think you'll be intrigued to see how many profits and losses I've made in the last few years. Okay, so we're going to start off with the big one, 1 ounce bullion, an ounce of gold. In 2023, I paid £1,681 for an ounce of gold. Now, I looked at a specific bullion dealer for the purpose of this video because they reveal their buyback price on their website. So it made it extremely easy for me to figure out how much money I'll get back at the bare minimum. Of course, you can always make more selling privately, but for the purpose of this video, I'm using one specific bullion dealer, which I'm not going to name, but it gives me an idea of the bare minimum of what I would get back. So going back to the 1 ounce topic, I paid £1,681 in 2023 for an ounce of gold. The buyback price now is £1,904. So that means I'm in profit of £223. That's a percentage increase of 13.26% in less than 1 year. I'm very, very pleased with that, considering an ounce of gold is such an astronomical amount of value. And generically, investors who are seasoned and experienced will consider any investment yield return of 10% or above as a very good yield on their investment. So to see that I've already got 13.26% positive. That's £223 positive as well on my 1 ounce gold bullion coin purchase. I'm very, very pleased with that, specifically as gold is a long-term investment as well, because generically you have to wait a long time to recoup those premiums. But what you're going to see throughout this video as we go down into the lower values of precious metals, you'll notice that the lower the weight in precious metal, the longer you have to wait to try and get into that positive. So it's off to a good start. Less than a year, I'm already up in value on a 1 ounce gold coin. Now moving on to my next favourite weight of precious metal, the 1/4 ounce gold and Britannia. Now in 2022, I paid £417 for a 1/4 ounce gold and Britannia. That's 7.7 grams of 24 karat gold bullion. The buyback price now, however, is £476. So that's an increase in 2 years of £59. And that's a percentage increase of 14.14% positive. I'm very pleased with that as well, because fractional bullion tends to be higher on that premium front. So you have to wait much longer to get that profit back or to even break even. So to see the fact that I'm actually up 14.14% or £59 on only a fractional piece of 1/4 ounce gold bullion in 2 years, I'm very pleased with that, because that now means the 1 ounce and the 1/4 ounce bullion that I bought in 2023 and 2022 are not only preserving my wealth and hedging against inflation, which is what we do it for, but it's also got me in profit. So essentially now anything else is a bonus. However, let's move on to 1 gram gold, specifically a 1 gram PAMP Gold Bar that I purchased in 2020. Now I paid £62.40 for a 1 gram PAMP Gold Bar. How much is the buyback price now? Well, the buyback price is £61.28. So that means in 4 years, I have still not recouped, at the bare minimum, my value of purchase. I'm actually negative £1.12, and that's negative 1.79%. So in 4 years, I still haven't recouped the money that I spent in that investment to preserve my wealth and hedge against inflation. This just goes to show, doesn't it, the difference between 1 ounce and larger fractional pieces like 1/4 ounce or maybe a 1/2 ounce gold piece when comparing it to 1 gram gold. The premiums on 1 gram gold are astronomically high. To hold the investment for 4 years and to still technically be in the negative, it's a bitter pill to swallow. But we know that when it comes to 1 gram gold, unfortunately, because gold is so expensive, there's a big premium you have to pay to get involved. So unfortunately, only some people can afford 1 gram gold bullion. It's the easiest and only possible way to get into the market. Now, nonetheless, we know that gold is a long-term investment. We're talking, a decade or 2 decades. So yes, I'm still in the negative after 4 years, but we're very much close to breaking even. And then again, once I say anything after that is a bonus. And we are looking beyond the end of our nose here, because we need to think about it as a long-term wealth preservation investment, 10 to 20 years. But it does really prove that 1 gram gold bars have such a massive premium when you see that I'm still in the negative after 4 years. So in conclusion, investing in gold, has it paid off? Absolutely, it's paid off. Yes, 1 gram gold bars have kept me in the negative, but the 1 ounce, the 1/4 ounce, and the larger fractional pieces have already yielded the results of what I paid for them and given me some nice profits too. But that's not what is important, is it? What's important is that gold is insurance. It's a protection device. It's your wealth preservation. It's a hedge against inflation. You don't invest in gold to become rich. You invest in gold to keep you rich. So it's not always about looking at the profit side. It's about looking at what that specific investment asset has done for you in that period of time. And in this specific period of time, we have made great yields by hedging against inflation. Our monetary value hasn't devalued or lowered because we've invested it in an asset that goes up in value, not down. We've also learned that fractional bullion takes longer to pull back on your investment, specifically 1 gram gold. But nonetheless, even so, it's still beating inflation, and it's better to have some gold rather than no gold. I hope you've enjoyed this episode. It's been a video on 5 years of buying gold. Has it paid off? and was it worth it? Thank you very much for watching. I'd love to know your thoughts in the comment section below. Please put some comments and I'll reply back to you whether you think it is worth investing in gold for a short or long-term period. And while you're there, the like button is just above the comment section. It costs nothing to click and it really helps me as a content creator. So I'd really appreciate it if you can smash that like button for me. If you have watched until the end of the episode, well, maybe you want to see some more content, consider hitting that subscribe button and clicking that bell notification so you don't miss out on any of our next uploads. Until next time, I'll see you all in the very next episode. Thanks for watching. Bye-bye.